Good morning. It's Market Day Report Live, Day 2, Farm Progress Show, Decatur, Illinois. We're so glad you're with us. And, speaking of being with us, we've had quite a few drop by and say hello. Kyle and Abby Hawkins from Oakwood, Illinois, stopped by and said hello. Mike Kors, Greensburg, Indiana. Also Richard and Linda Strobel, Concordia, Missouri. Tom and Deb Clipping, Lena, Illinois. John, Joseph, and John Peters from Monticello, and Phil Peterson from Madison, Wisconsin. We'll hope if you're here for Farm Progress either today or tomorrow, you'll drop by and say hello as well. Let's go to the markets. Overnight action, and we'll start with the corn market, and pretty much lower across the board as we look at what happened in the overnight session. 407 3/4 on the December, as that was down a penny and 3/4. The deferreds 1.5 to 1 3/4 cents lower. Soybean trade November at 10.48 3/4. It was down 3/4 of a cent, with January through May losing anywhere from 3/4 to a penny and a half. As far as wheat goes, September is what we're really focused on right now. Near the bottom of the trade range at 403 1/4. It was off 6 1/4 cents, and that July contract, next year's new crop 564, it fell 5 1/4. Same thing for hard red, next year's July, which will plant soon or have been planting in some instances, at 558 off 5 1/4. But that September front month fell to 486 1/2 off 6 1/2. We go to Minneapolis, and spring wheat contracts were lower as well. And then over to New York, where cotton futures, joined in on the trend, down 7, 66.64. Well, let's go to Springfield, Missouri. That's where Brian Hoops is, and he's president of Midwest Market Solutions. I didn't see a flash sale, so what are we watching today?
Yeah, Tony, good morning. No flash sales this entire week. A little bit of a disappointment that we haven't seen any business from an export standpoint. We are seeing basis levels starting to weaken across the entire United States as the market is preparing for harvest activity. And in fact, we've seen some harvest down in Texas and some other areas. So where do we go here? Well, wheat market's pulling corn down this week here. We've got good rain across a lot of the winter wheat plains areas that have been very dry from July and into August. They need some rain badly to kind of get that soil prepared for seeding in a few weeks when we start the winter wheat seeding process. We're finally expected to get some rain after being the wettest May on record. We've seen the driest August on record. And the ground's a little firm, a little hard here, and it really needs to soften up, and we'll get some rains to do that. And the wheat market is pulling back off of that news, and maybe just a lack of any export business. So it's hard to find a good headline here for the grain markets to trade on. There doesn't seem to want to be a lot of buying interest in these markets at these levels, especially as we go into delivery period, which begins Thursday afternoon. First notice day is Friday, and then of course you have a 3-day weekend coming up. So there's not a lot of interest in buying a lot of these markets in here. Soybeans may be the lone exception, as there is a Chinese delegation coming to the United States to talk. That, of course, is fueling some ideas or speculation anyway that maybe we'll reach some trade agreement for China to buy U.S. soybeans. But that's pretty far-fetched, I think, at this point in time. They don't need to buy any U.S. soybeans right now. They haven't bought anything. And unless South America has a production shortfall, there really isn't any need for them to buy any place other than South America. They have enough production out of Brazil and Argentina to meet China's demand. Normally, they step in about September, October timeframe and buy a few soybeans just to meet their needs. But I don't know that they have that need at this point in time because of sources out of South America.
Yeah, Brian, you mentioned China and maybe trying to work a deal there. Korean president at the White House this week. So that's a big, important market when it comes to meat. So let's take a break. We'll come back in a moment. We'll pick up the conversation talking beef and pork. Market Day Report continues in a moment. So it's day two from the Farm Progress Show in Decatur, Illinois. We're glad you're with us here this morning. And again, if you're in the area, pop by and make sure you pop over to the RFD TV tent. We'd love to see you. Okay, how about 6 out of the last 7 days we've had a higher close in the livestock markets, talking about cattle right now. And let's go to the live cattle market. As we moved higher in the trade on Tuesday, up 247 front month, hit 242.70, and we settled at the top end. Now we have trade today, Wednesday, we have Thursday, and then we wrap things up on Friday as that August contract will expire. Most active hit 238.52 yesterday and settled $1.30 higher, talking about that October contract. What about the feeders? Well, can you say more record highs? Yeah, we could see more record highs in this feeder market. Hit 365.67 yesterday on the September, and then pulled back to 364.87, up 297. And again, both of those markets higher 6 out of the last 7 sessions. Hogs, well, they've been pulling their own, up 4 straight sessions. $2 higher yesterday on October at 93.40. Helping us to break it down, well, it's Brian Hoops, Midwest Market Solutions. Brian, thoughts here?
Well, yeah, there wasn't much to talk about in the grain markets, livestock. It seems like there's a lot more to talk about. You have big slaughter numbers for the cattle and still higher cutout values. They surged higher yesterday afternoon, well over $4 at midday and the closing bell. So those cutouts continue to surge despite increasing the slaughter pace. Eventually, that cutout buying is going to come to an end. We're buying for Labor Day holiday, which is just Monday. So we're going to see that slowly come to an end, and I think we'll see the cutouts start to drop off after that. But right now, it's really improving those packer margins, estimated to be about $82 to the plus side. So we'll look for cash trade to be steady to higher again this week. That's supporting the futures market. Who knows where this market's going to top out? No one really can tell, but it's been a tremendous ride to the upside. But really, until the cash market starts to peak, you're unlikely to see a big correction in the futures market until that happens. Hogs cash market strong yesterday, almost $3 higher in a lot of the country. Western Belt 271 higher. So we're seeing a lot of strength in the cash markets, not reflected in some big gains in the futures as well. Hog weights are staying about steady with not only a week ago, but also a year ago levels right around 281 pounds. So those are pretty manageable levels. And I think we'll likely to see additional gains here in both the livestock sectors, beef and pork markets this morning.
Yeah, good points there. Brian Hoops is president, Midwest Market Solutions. We'll see you back here tomorrow.